Assalamualaikum and hi everyone. Today I will be talking about accounting for other business enterprises. There are three subtopics in this chapter. The first one is manufacturing, the second one is branch, and the last one is non-profit organization. So the first one, I will be talking about manufacturing. So you must be wondering, what is a manufacturing account? Manufacturing account is a vital component of the manufacturing firm's final account. It consists of prime costs and overhead expenses that incurred during the production process. So in manufacturing account, it will not show us the profit or loss figures, but it will determine the cost of the production. In this manufacturing account, there are few costs, such as raw material, factory labor, and other indirect expenses that are related to the production progress. So now I will be talking about the differences between trading business and manufacturing business. So for trading business, there are only one type of opening and closing inventory, which is finished goods. And for the manufacturing business, there are three types of opening and closing inventory, which is raw material, work in progress, and finished products. So for the second one, I will be talking about the determination of the selling price. So for trading business, it is determined by adding the profit to the purchase price. But for the manufacturing business, we need to add the profit to the manufacturing cost. So for the next one, I will be talking about the elements of manufacturing cost. There are seven of the elements. There are seven of elements of manufacturing cost. The first one is prime cost, the second one is direct material, the third one is direct labor, the fourth one is production overhead, the fifth one is indirect material, and the sixth one is indirect labor, and the last one is indirect expense. So for the next one, I will be explaining the definition and example of elements of manufacturing cost. So the first one is prime cost. So what is prime cost? Prime cost is an expense that is related directly to the production process. So for example, direct material, direct labor, and direct expense. So the second one is direct material. So direct material is a cost of material that we use to make products, and it is directly related in the making of the products. For example, if you want to make a cookie and the raw material of the cookie is flour, eggs, and sugar. So like I said earlier, those ingredients directly related in the making of the cookies. So the next one is direct labor. Direct labor is a worker that is directly related in the making of the products. For example, the skilled workers that are involved in the making of the products. So the next one is production overhead, also known as manufacturing overhead or factory overhead. So production overhead is actually a cost that is incurred during the production process, but it is not directly related to the production. For example, indirect material, indirect expense, and also indirect labor. So the next one, I will be talking about indirect material. So indirect material is a material that we use in the making of the product, but we only use a little bit amount of them. So for example, when we cook, we always use sugar and salt, but we only use a little bit amount of them because we just want to like balance the flavor. So in this case, salt and sugar is a indirect material. So the next one is indirect labor. Indirect labor is a worker that does not involve in the production process, but they are needed in the factory to operate. For example, managers, supervisor, and maintenance worker. So the last one is indirect expense. Indirect expense is an expense that is incurred during the production process, but it is not related to the product. So for example, it's factory rent, utility, depreciation on equipment, and also insurance. So that is all the elements of manufacturing cost. So now I will be talking about loose tools. So what is loose tools? So loose tools is a small tools and supplies that are used in the production process. These tools must be movable and easy to use among the workstation in the facilities. For example, screwdrivers, hammers, and scales. Loose tools is not considered as fixed asset because they are not easy to track because of their low cost, and they are easy to break. So in context of manufacturing, loose tools is an indirect material and also part of overhead costs in manufacturing. So loose tools also can be a part of current asset. This is because some businesses might keep loose tools as their inventory. So the next one is work in progress, also known as goods that are not yet finished. So work in progress can be valued at prime cost or production cost. So if the work in progress is valued at prime cost, we need to show the adjustment of different value of work in progress at the beginning and the end of the accounting period. After the prime cost, which is the total of direct material, direct labor, and direct expense, and before we add the production overhead. But if the work in progress is valued at production cost, we need to show the adjustment of the opening and closing work in progress after the prime cost and production overhead, but before we add production factory profit. So there are two ways to calculate the factory profit. The first one is we need to apply a fixed markup on the manufacturing cost of the goods produced. The second one is we need to minus the market value of goods produced with manufacturing cost of goods produced. So the next one is allowance for unrealized profit. So allowance for unrealized profits happens when a company has a finished products but they haven't sold any of it yet. The company will record this product at selling price, which includes the profits. But we haven't even got the profit yet because the goods are still unsold. So we need to remove the unearned or the unrealized profits from the account. So that is all for the first subtopic, which is manufacturing. And now I will be talking about the next subtopics, which is branch. So the first is branch and head office. So as we all know, the main purpose of most of the business is to maximize profit. So to maximize the profit and to increase the amount of sales, many businesses open their shop in the other countries. So when businesses open their shop in a different country, these things it is known as branch office. Head office is a main office that is responsible for all of the branches. Head office is also responsible of buying all the stocks that is to be sold by the branches. So we might thought that head office has a full control over all of the branches, but the head office can give power to the branch manager to make a decision on the management of the branch itself. But we should know that branch and department is two different things because department usually operate the same location as the business organization. So there are two types of branches. So the first one is selling agency branch. And the second one is autonomous branch. The first one is selling agency branch. Selling agency branch is also known as dependent branch. This is because they can only make a little decision for the branch and the rest is made by the head office. So for autonomous branch, they have a lot more freedom because they can make their own decision on management and business policy at the branch. Autonomous branch, also known as independent branch. So next, I will be talking about autonomous branch. Autonomous branch will also prepare its own trial balance and final accounts and send the copies to the head office. So the autonomous branch will have head office account in its books and head office accounts will have autonomous branch in its books. So any transaction between the head office and the branch will be recorded in the current account. So next is the current account. So current account is made to record all the transactions that happens between the head office and the branch. Current account is also used to monitor the financial connection between the head office and the branch to make sure that the financial connection of the branch is accurate with the main company's financial statement. So that is all for the subtopic 2, that is branch. So now I will be moving on to the last subtopic, which is non-profit organization. Non-profit organization, also known as non-business entity, they will provide facilities and service for their members. So they are known as an organization that works in any charitable purpose. This organization will use its income to achieve their goals, which is promoting education, religion, and arts. This non-profit organization also does not pay any income tax because they use their own income to serve the public good. So now I will be talking about the differences between the profit organization and the non-profit organization. First one is taxation. So the profit organization must pay the tax as the law says, but the non-profit organization does not have to pay any tax because they use their own income to serve the public good. So the second one is funding. So for the profit organization, they usually got the funds from the sales of the products, investment, and bank loans. But for the non-profit organization, they but for the funds or but for the non-profit organization, they usually got the funds from the donation, sponsorship, and also crowdfunding. So the second one is account of non-profit organization. So the first one is receipt and payment account. So in this account, it will show all the cash and check transaction for the financial year. All the money that we receive will be debited and all the money that we pay will be credited. We close the account. If there's any balance, the balance will be carried down to be an opening balance for the next financial year. The second one is income and expenditure account. This account is made to find a surplus or deficit during the year. So this account is also used to compare the income and expenses of the organization. So if the income is more than expense, it is called as surplus. And if the income is less than the expenses, it will be called as deficit. So the third one is accumulated funds. So this accumulated funds is also like capital account, but it's for a non-profit organization. If we got surplus, we need to add to the accumulated fund. But if we got deficit instead, we need to deduct from the accumulated funds. So the last one is the income for the non-profit organizations. So there are 5 types of income that the non-profit organization have. The first one is annual subscription, which means it's an annual fees that is paid by the members to retain their membership in the organizations. The second one is entrance fees that is paid by the new members for joining the club. The third one is life membership subscription, which means the fees that are collected by the social clubs, and in return they will get a full access of the facilities and service. The members will pay this fee just one time in their life. The fourth one is donation. There are a lot of donation that will that there are a lot of there are a lot of donation that they can get. For example, private donation, street collection, sponsorship, and also online advertising. All of these donations must be recorded, whether it is cash, check, or online payment.